Welcome to this deep dive, where we plunge into your sources to uncover the essential insights. Today, we're focusing on Energy Absolute, or EA, a key player in Thailand's clean energy and transportation sector. What you shared with us paints a picture of a company that faced, well, a perfect storm in 2024, navigating major challenges, but it also shows clear signs of fighting its way back in 2025 with some pretty big strategic shifts.
Absolutely. The materials really lay bare the depth of the pressures EA encountered,
Oh.
you know, financial strains, regulatory shifts, significant market headwinds. Yet they also detailed the very specific, sometimes pretty drastic actions the company is taking right now to regain stability and chart a path forward.
So our mission today is to synthesize these different perspectives from your sources.
Yeah.
We've got the grim financial reports from last year, but also the stated recovery plans, future opportunities, all the things the company and analysts are now discussing. We're going to help you understand not just what happened, but why it matters, and what the critical points are for assessing their situation today.
Exactly. Let's get into it.
Okay, let's unpack this. The sources are really upfront about how difficult 2024 was for EA. I mean, the financial hit was substantial, right? We're talking about a reported revenue drop of, what, 39.1% for the full year compared to 2023? That's a massive decline.
It is a huge drop. And drilling down into the end of the year, the fourth quarter of 2024 saw a significant net loss. The reports show it came in at 9,305.63 million Thai baht. And the sources attribute a large part of that loss to accounting provisions, which, often indicates setting aside funds for potential future liabilities or write-downs.
Right, and looking across their business lines, it seems most of their core areas saw revenue decline. Renewable power, their electric vehicle business, the buses and commercial vehicles, biodiesel, even batteries, all down.
All down. The only slight uptick was in other businesses, like waste management, which saw a small increase.
So what specific pressures were hitting these areas so hard, according to the sources? What was going on?
Well, multiple factors converged. On the renewable energy side, there were shifts in government policy. The sources mentioned adjustments to the FT rate. That's the variable electricity tariff, right? Which can directly impact the revenue EA earns from selling power from their renewable projects. So that's one hit.
And they also point to changes in biodiesel policy, something about the blend.
Yes, exactly. Specifically, the government shifting the mandatory blend in fuel away from B100, which is pure biodiesel, towards B5. B5 uses a much lower percentage. So less required biodiesel meant less demand for EA's product. Simple as that.
Okay, so policy hits on renewables and biodiesel. What about the EV side? You said that was down too.
Yes, and perhaps the most significant operational challenge highlighted was in the EV business. Customers, the reports say, slowed down or even delayed taking delivery of those electric buses and commercial vehicles they had ordered.
So inventory starts backing up, cash flow slows down.
Precisely. That creates serious issues. Yeah.
Right, so you have all these external pressures on operations and sales. But then the sources reveal something else entirely, a major internal event that really seemed to shake confidence. Here's where it gets critical. In July 2024, the SEC Thailand's Securities and Exchange Commission reportedly accused two key executives, Somphot Ahunai and Amorn Sapthawiko, of alleged fraudulent actions causing damage to the company. That's huge.
That event, according to the sources, it had immediate and cascading consequences. One major impact was on their sustainability standing. Because of this legal issue, EI failed the ESG rating criteria set by the Stock Exchange of Thailand.
ESG, environmental, social, governance, those ratings are crucial now.
They really are. And failing them meant EA's ability to issue green bonds specifically for funding environmentally friendly projects, which they rely on, was severely hampered.
Okay, so the fraud allegations hit their ESG, which hits their ability to raise money through green bonds.
Exactly. And that, combined with other factors like the slowdown in EV payments and just the general market conditions, led directly to what the company itself described as a liquidity crunch.
A liquidity crunch? How big are we talking?
The sources cite the figure of approximately 12,000 million Thai baht. Essentially, a significant cash shortfall they needed to manage, and quickly.
Wow. And you can see the strain on their balance sheet too, right? The debt levels.
Yes, definitely. The debt-to-equity ratio, which measures how much debt a company uses versus its assets funded by equity, it jumped from 1.60 times in 2023 to 2.19 times in 2024.
So considerably higher debt burden relative to their equity base. That's not good.
No, it indicates higher financial risk.
And one source raises a really crucial point about their financial structure that seems to have made things worse.
Yeah.
It suggests EA didn't primarily use project finance for their projects. where debt is usually tied specifically to one project.
That's right. Under typical project finance, the debt is ring-fenced, meaning it's secured only by that specific project's assets and cash flows. But EA reportedly pooled financing across multiple projects instead.
Which sounds like it could increase leverage, maybe? But what's the downside?
The huge downside is the risk of cross-default. It means if they default on the debt linked to one project, it could trigger defaults on debt linked to others. This structure, unlike that ring-fenced project finance, reportedly made untangling the financial issues much more complex during their crisis.
Okay, so the structure itself added risk. So how did the market react to all of this? The financials, the operations, and especially that executive issue?
Well, the financial market reacted strongly and negatively, as you'd expect. Reports show a sharp drop in EA's stock price, particularly in June 2024. It even hit the floor. That's a 30% single-day drop limit on one occasion.
Ouch. Did the company explain that?
Well, the company attributed some of this to broader external market downturns, but analysts specifically highlighted company-specific pressures, including that executive issue, as major drivers. Can't really ignore that.
And what about bondholders? Or funds holding those bonds?
Yeah, there were significant actions there too. The Association of Investment Management Companies, the AIMC, that's the body representing fund managers in Thailand, they placed EA securities on a restricted list. Meaning fund managers couldn't make new investments in EA until there was more clarity, basically a timeout.
Okay. And for the funds that already held EA bonds?
Right. To protect existing investors in those funds, many managers had to use specific tools. The sources mentioned side pocketing.
Side pocketing?
Yeah, it means segregating illiquid EA bonds into a separate pocket so their uncertain value didn't distort the main fund's net asset value, or NAV. They also used redemption gates, which limit how much money investors can withdraw from a fund at certain times.
So limiting withdrawals, these actions really underscored just how risky and illiquid EA's bonds were perceived to be at that moment, don't they?
Absolutely. It shows a real lack of confidence in market functioning for their debt at that time.
Wow, okay, that was a tumultuous 2024 indeed. A perfect storm hitting from, well, pretty much every direction. But looking at the more recent sources, particularly those from 2025, we start to see a shift, right? There are glimmers of a turnaround and very concrete actions being taken.
Absolutely. The first quarter of 2025, according to one source, shows a significant improvement, a real change in direction. They reported a net profit of 645.70 million Thai baht, excluding special items. That's a dramatic shift from that deep loss in Q4 2024.
Okay, a profit. That's good news.
Right.
And the reports explain why this turnaround happened in Q1. What drove it?
Yeah, a couple of key things. A major factor was a reduced share of losses from joint ventures, particularly in the battery business. Suggests those operations are becoming less of a drain. Also, they saw increased power generation from their wind farms. So better performance there too.
And crucially, what about that liquidity crunch? Are they tackling that head on?
Yes, very much so. The sources highlight that EA reported sufficient cash flow from operations, about 2.45 billion Thai baht in Q1 2025, plus funds raised from a recent capital increase, around 7.4 billion Thai baht. And they state these funds were successfully used to pay off a major hurdle, 5.5 billion Thai baht in bonds that were due in May 2025.
Paying off that big bond maturity is critical. That must have been a huge relief internally, and it directly addresses one of the major concerns about their ability to meet debt obligations.
Definitely a positive signal to the market.
Are they taking other steps on the financing front? More borrowing?
Yes, the sources say they are actively seeking additional bank financing. They're looking for partners to help manage approximately 10 billion Thai baht in ongoing liquidity needs. And they've apparently already secured one large bank partner, according to the report, so progress there.
Okay, so shoring up the finances. What about the business operations, particularly that struggling EV ecosystem?
Right, they're also aggressively trying to revitalize that.
Right.
The sources mention that after increasing their stake in NAX, that's their EV dealer, to 50%, they've sent EA management directly into NAX, the goal, to help clear the existing stock of electric buses and commercial vehicles.
Get rid of the inventory backlog. How much cash could that bring in?
The estimate mentioned is around 4 to 5 billion Thai baht in cash from selling this inventory.
Okay, but are they selling it at full price?
Well, this is key. They're doing it even if it means taking an acknowledged impairment, basically a 30% discount on the value.
So they're willing to take a hit on the value just to get cash in the door quickly.
Precisely. It really underscores the urgency of the liquidity situation and their focus on generating cash flow fast.
Makes sense. What else on the EV front?
The sources also note they've temporarily halted production at their EV assembly and battery plants.
Halted production. Is that permanent?
No, the sources frame it as temporary. It's presented as a move to conserve cash and cut costs, saving an estimated 300–400 million Thai baht per year, while they focus on selling the existing inventory and presumably figuring out their future product pipeline. Sort of a strategic pause.
Okay. And what about the battery business specifically? That was contributing to losses earlier.
Yeah, in the battery segment, they are actively seeking technology partners, particularly from China. The sources indicate they want to bring in normal charge technology, potentially a lower cost, maybe less complex charging solution to complement their existing, more expensive ultra-fast charge technology, maybe broaden the appeal.
Interesting. And they're offering incentives to these potential partners.
They are. They've even offered factory space in a free zone, one of those areas with special tax and customs rules to encourage export manufacturing. The idea is for Chinese partners to produce energy storage systems, ESS, for export markets, including, interestingly, the U.S. market.
So using Thailand as a base to export ESS, potentially avoiding some trade friction. Has that worked?
Well, the sources do mention that U.S.-China trade tensions have somewhat slowed down some of these partnership discussions. It adds complexity. However, they emphasize that deals are still actively being pursued, with hopes for conclusions by the end of 2025. And they did sign an MOU, a Memorandum of Understanding, with a Chinese special vehicle manufacturer back in December 2024. So there is some concrete progress.
Okay, so they've weathered the storm, taking steps on liquidity, restructuring parts of the EV business, seeking partners. Looking ahead now, based on these sources, what are the core strengths and the strategic opportunities EA is really focusing on to build their future?
Well, the renewable power business is clearly highlighted as the company's backbone, the core strength. And despite the added tariffs, those government incentives added to the base electricity rate potentially phasing out in the future. EA benefits significantly from older power purchase agreements, PPAs, that have much better terms than new projects being signed today.
Better terms how?
The sources mention higher base rates, like 3.70 Thai baht per unit for their solar projects, versus maybe 2.1 as for new solar now, and 3.30 for wind, versus around 3.1 for new wind. And crucially, these older contracts reportedly have the ability to be renewed every 5 years, making them effectively perpetual PPAs under current policy. That's a huge asset.
That provides a really solid base of predictable revenue, doesn't it? How much are we talking about from renewables in the near term?
The sources project that this renewable business is expected to generate around 10 billion Thai baht in income in 2025.
Okay, 10 billion. That's significant.
Very. It provides crucial revenue for the next, say, 2–3 years, while they sort other things out. However, there's also a clear acknowledgement in the sources that income from these specific older projects is projected to drop significantly, down to around 5 billion Thai baht in about 5 years.
Why the drop?
That's when the adder period, the extra incentive payment, fully ends for those projects.
Right. So that time frame really emphasizes the critical need for EA to find new growth drivers relatively soon before that drop happens.
Exactly. They need to fill that potential gap.
And where are they looking for those new drivers, according to the sources?
Well, they're actively pursuing new renewable projects. They're waiting on PPA signings for their Phase 2 wind project, which is 180 megawatts. They're also heavily focused on waste-to-energy projects using waste to generate electricity. One such project is under construction in Phuket, and they are seeking more. They've even piloted a waste management service on Koh Larn, for instance, which kind of ties into this whole circular economy theme.
Okay. More renewables, waste-to-energy. What else? Biofuels.
Yes. The bioinnovation side is also presented as a key focus area. Their sustainable aviation fuel, or SAF plant, is a significant project mentioned. A big bet. It's expected to start production at 100,000 liters per day in late Q3 2025. So, pretty soon.
And is there demand for SAF?
The sources suggest they're already in discussions with airlines. And crucially, that demand for SAF currently exceeds supply. So, essentially a very lucrative market. Plus, the capital expenditure, the CapEx, for this project is largely spent, meaning it's close to becoming an operating asset contributing revenue, not just costing money.
Good timing, then. Are there any other potential new ventures on their radar? Anything more speculative?
Yes. The sources mentioned they are studying potential projects like a green data center. The plan there seems to be partnering with leading firms and using their own solar power generation capabilities to provide clean energy for the data center's operation, leverage their existing strength.
That makes sense. And here's an interesting point that contrasts with all the struggles of 2024. Despite all the financial and operational challenges they faced, the sources note that EA received a top 10% ESG rating globally from S&P Global in May 2025.
Yeah, that is noteworthy. The company reportedly views this as a validation of their underlying commitment to clean energy and sustainability, even while navigating such a difficult period. Sort of a, see, we're still fundamentally green message.
So they've got the stable renewable backbone, these new ventures like SAF and waste to energy looking promising, and even this positive ESG signal. But let's be realistic. Even with signs of recovery and these plans, the sources also acknowledge that challenges persist, right? The storm hasn't completely passed.
That's absolutely right. No rose-tinted glasses here. There are still significant hurdles. Market risks remain, like the ongoing effort to successfully clear that EV stock that needs to work, and the larger process of fully rebuilding confidence among investors and lenders.
That trust takes time to rebuild, doesn't it?
It does. Although, as we noted, successfully repaying that $5.5 billion BAT bond was a very positive step towards that, a concrete action.
What about competition?
Yes, competition is also a factor in both the EV market and the renewable power sector. It's not like they have these markets to themselves. Others want a piece of the pie.
And operationally. Any ongoing challenges mentioned?
Sure. Challenges include ensuring the efficiency of their battery plant once it restarts and successfully securing those technology partners they need for both the battery and EV assembly businesses. Especially given the uncertainty surrounding international trade dynamics we mentioned earlier, that adds a layer of risk to finding partners.
Their credit rating is also still below investment grade, you mentioned. What does that mean for them right now, practically?
Well, being below investment grade signals a higher perceived risk by rating agencies. So it makes it more difficult and certainly more expensive for them to issue new bonds in the near term to raise capital.
So funding future growth through bonds might be tough for a while.
Could be. While they're apparently talking to rating agencies and might consider issuing bonds later in 2025 if conditions improve, it's currently a constraint on their financial flexibility.
And are they considering selling things off to manage debt?
Yes, the sources mention that selling assets is still an option being considered to help manage liquidity and reduce debt. They specifically mention potentially selling the rights to the Fitsanuluk power plant.
Okay, so asset sales still on the table. And one final point. That executive issue from 2024, has that been fully resolved?
Well, this is important. While the company states that their internal audit found no wrongdoing regarding those executive accusations, the sources indicate that the SEC's position reportedly remains without a public update.
So the regulator hasn't publicly cleared it yet. That legal cloud still kind of hangs over the company, doesn't it?
It does, and it could impact those trust-building efforts with the market we talked about. Uncertainty isn't helpful.
So, wrapping this up, what does this deep dive into EA's situation mean for you, our listener? We've looked at a company that went through a very public and, frankly, bruising crisis in 2024. It hit them financially, operationally, and definitely affected their reputation and market trust.
It really is a compelling real-world case study in corporate resilience, maybe corporate survival even. It shows how a company can face this confluence of problems, policy changes, market downturns, internal legal issues, liquidity crunches, and then has to put concrete, often difficult plans in place to address them head-on.
It also highlights the really complex interplay of internal management, external market forces, the regulatory environment, and those strategic pivots, all within a dynamic sector like clean energy and transportation. It's rarely just one thing going wrong, is it? It's often a combination.
Exactly. It's the interaction between all these factors.
So, given this complex picture from the sources, what stands out to you? Is it the sheer scale of the loss in 2024 that grabs your attention? Or maybe the specific, almost day-to-day methods they are using now to manage liquidity and debt? Or the strategies to clear that EV stock bottleneck?
Or perhaps it's the potential promised by their new ventures, like sustainable aviation fuel and waste to energy. Where do you see the main story?
We've journeyed through Energy Absolute's recent challenges and the detailed path towards recovery outlined in your sources. We've examined the financial fallout, the operational adjustments, and the strategic bets they are placing on the future of clean energy.
It's definitely a story of a company fighting its way back from a very difficult period. They're leveraging their core strengths in renewable power, while simultaneously trying to revitalize and innovate in those newer businesses like EVs and bio-based fuels. It's a tough balancing act.
So here's something to think about. Given the significant, almost existential challenges faced in 2024 and the ambitious steps now being taken in 2025, What does EA's journey tell us about the inherent risks and the kind of resilience truly required in driving the clean energy transition forward? Can that stable, albeit aging, renewable business and the potential of ventures like SAF and waste to energy truly power their comeback, especially as they navigate past issues and those lingering uncertainties highlighted in the sources? That's certainly something to mull over as you consider this complex picture.